Hey everyone, hope you're doing well. Wanted to do a recap of this morning's New York AM session at 9:30 open. This was 100% using RyleyTrades approach or system on the 30-second chart. One of the beefs I have with a lot of these strategies is they all come with the prerequisite that you have to have a target or POIs, which is non-mechanical in general. Yes, we can draw them, and I'm going to do them right now. But you could be the POI could be on a daily, a 4 hour, 15, 5 minute, 1 minute, whatever it might be on. They're everywhere, and you can use any of them. So it's really hard. Personally, that's where I struggle. Anyway, what I wanted to do is I'm on replay mode right before New York Open, 9:30 candle. If I go to the 1 hour, actually, it's probably best to see what we have going on. But I can't do the 1 hour. I'd have to go back even more. You wouldn't see this candle. You would only see this candle right here. But if we did have that, just ignore this black candle. We would have a liquidity level here. We would have a large fair value gap here, right? So this is what basically, okay, let me just go ahead and select that bar. So it would look like this, right? So you can see basically in my mind, okay, well, the fair value gap already got tagged on the 1 hour, or at least tapped, not fully mitigated. I'll draw this other one just to have it, and nothing up above. Okay, so that's kind of where we're starting out at on the 1 hour. If I go down to the 15-minute, we can just kind of do some refinements, I guess. But basically, you would just refine the POIs a bit. Maybe not that entire block. It would just be that particular zone. So it's basically still the same stuff, right? So anyway, if we were on this 8:45, so we still haven't quite, looks like we did tag it. Looks like we did tap it at 8:45. But I'm going to go ahead and hop down to the 30-second chart, or 1 minute, whatever. Doesn't matter, same thing. And so this is where we were at open. So we'll just print the first candle, push up. All right. Let's speed up a little. Oh, we're not at one. Oh, sorry. I moved. My bad. I moved the replay back to 9 a.m. My bad. So I'll just drag this out here. No, they're still there. Okay. So 9:30 is right here. That's where I'll stop it. Okay. Okay, so we get the first minute of 9:30, so 9:30:30, and there's really nothing to do. The only thing that we have on the 30-second chart is this fair value gap up here. So if price were to come back up in here, we would have a valid sell, unless it gets inversed. But if it tags it and then rejects off of there, that would be a sell opportunity. Okay, so here's the problems where I ran into problems. So right away we get this. This was a 15-minute. It's a 15-minute level I had marked out. You can see there it's a 15-minute low that I had marked out, and the 15-minute fair value gap was not tagged. So it's just kind of like in middle ground. The fair value gap is still way down here. So you're in a quandary. Do you take this level as liquidity getting taken, or do you just stick with the fair value gap down below? Anyway, that's point of confusion already. Anyway, so see we make more bearish structure. Our structure, we just continuation of order flow is bearish. We're creating bearish fair value gap. Create another one. So basically, at any time, in my mindset should be we're bearish and we've got this POI to trade towards, so we should only be looking for sales. But in my mind, this level here getting taken out is just stuck with me, and I was looking for longs because we took liquidity and we're going to go long after that. That's where I ran into issues this morning. But obviously these were the correct place. Make another fair value gap. And find a little support here. Breaks through. Just waiting for something to get tapped. Either down here or up here, one of these. Obviously, we don't get any entry so far anywhere. Now we get the possibility of an entry if we're looking for sells. Again, I'm not looking for sells. If you're looking for longs and you take that as inverse fair value gap, you're wrong, but you'll see what I mean. So here, okay, so here's where if you are short, which I was not, but if you have a short bias, this is where using RyleyTrades approach, you just start marking out lows. And the first one that gets taken close below, then you would go short. However, I was not short. I had long bias. So in my world, or according to the rules, this is a valid entry. Even though we're running up against this fair value gap, we already mitigated this one. Or we inversed this bearish fair value gap, sorry. Right? These are all bearish fair value gaps. All right, so we inverse this first one here, and we get a valid entry to go long per those rules. Well, actually, we don't. We don't have a valid entry yet. What we have is a bullish fair value gap that was created. Okay, so this is what I'm looking at this morning. And we created this fair value gap. Okay, so this is it. Created the fair value gap. It got tapped or tagged right here on this candle, and then we create a new high from the previous high. So that is a valid entry to go long. 15 points or below, I put it at 20, below the fair value gap, 1-to-1, right? And boom, we get tapped out. So that was my first trade. So I'm just trying to express the confusion between, you know, liquidity that gets taken, an obvious liquidity level on the 15-minute that was taken, obvious 15-minute fair value gaps down below, you know, current time frame fair value gaps above, entry models, fair value gaps to go long. It's just not very obvious, right? It's just a boatload of confusion for me. And I don't know if that makes sense, but this is what I saw this morning. And anyway, so just continue. So, and then you can see we created, that particular candle created a bearish fair value gap, right? So if you're bearish, then this was actually a good entry for you, because, oh no, yeah, we did get a close below on that candle. So short, you would go short right there, stops above, probably just do 20 points, and this would be a good target here. So you could actually do a really good 1-to-5. And obviously that was the trade, right? So there you go. You know, and there were more trades. I'm not going to drag it out. This is just a good example of getting caught between higher time frame points of interest. Some of those higher time frame points of interest getting taken, expecting reversals, I don't know. Did you guys struggle with this? Let me know in the comments. Thanks for watching. Take care.